Yo, Market Scraper here. So in this video, we want to talk about some of the misconceptions around dividend stocks and why those misconceptions may lead some to not invest in them. So let's clarify all those misconceptions to make sure that you as an investor understand what's in front of you and what paths you might want to take, and if dividend investing is something that you might be interested in. And don't forget to smash that like button. It really helps with the YouTube algorithm to help promote my videos. And definitely please consider subscribing. It means so much to me. Okay, now let's jump into this video. Okay, so first off, one thing that I hear is how growth stocks, for example, might gain a lot more than dividend stocks. And so let's say that growth stocks definitely has the potential in general to gain a lot more, but growth stocks also have the potential to lose a lot more as well. And so that's the downside of growth stocks. And dividend stocks has the same potential to grow in value, just the price tag of the stock, and appreciate just like growth stocks. In addition to that, dividend stocks have the potential to increase their dividends. So there's many stocks that have increased their dividends over many years. And the third way is to reinvest those dividends. So if you have your dividends being reinvested in DRIP, then those dividends buy more of your shares, and those shares can now appreciate, and those shares can also give you even more dividends. So there are three ways. One way, again, stock appreciation like all stocks, and these other two ways help it compete and actually play pretty well against most growth stocks. So those are some things that you have to think about. And again, the tax situation now has to do that third part of reinvesting that dividend. So if you're looking at dividends as a passive income for right here and right now, then yes, you're going to be taking off some of that potential investment that you could be gaining on in the future. So if you take that 2% or 3% dividend now for that year, you're kind of taking off some of that appreciation that you could be getting. Like, for example, in a growth stock, you have that growth, yet in this dividend stock, you're kind of taking that away and you're paying taxes on that now. Know that the taxes for dividend stocks, again, are not all ordinary income. What is ordinary income are REITs, the dividends that they pay, and also if you have only owned that dividend stock within, I think it's like 60 days before the ex-dividend date, and then you will be paid, that payout will be at ordinary income, but all your subsequent payouts will be at long-term capital gains rate. And first of all, your investments ideally will all be in a tax-sheltered account. So if you have dividends in a tax-sheltered account, and those dividends are reinvested, and you keep growing that in that account, none of that will be taxed, and your dividends will just keep growing and being reinvested and buying more stocks, and those stocks will buy more stocks, and it's so beautiful. So okay, so let's look at the tax situation of when you are in a non-sheltered tax account, just an individual brokerage account. So let's say you get paid 100 dividends a year. That $100 in dividends will then get paid at the long-term capital gains rate of $20 or so. Let's just say it's $20 right now. So you'll owe $20 in taxes, but that $100 will be reinvested if you have that set to be reinvested. So you're paying the tax up front now, but you're still maintaining your capital, and you're not taking that passive income right now. So the question is, would you want to pay long-term capital gains tax now or later? And honestly, in my opinion, this is not financial advice here. It doesn't matter. And arguably, it's better to pay that now, because taxes for long-term capital gains could go up in the future. It could also go down, but so I'm fine with paying that tax right now up front so that I invest more a little bit right now. And if you think about in the future, when you want to cash in a non-dividend stock, you're still going to have to pay long-term capital gains. So the tax, you're not avoiding any additional tax. And it's the same long-term capital gains now or then, and you're having that reinvested, and so you're not losing out on the tax advantage there. And because again, the worry is that you're missing out on a tax advantage, so that even if it's a fraction of a percent, like 0.09% more in taxes, again in like 30 years, that could be tens, if not hundreds of thousands of dollars that you'd be missing out on. So it is a really important thing to consider, all things considered, taxes, all these different things, to make sure you're optimizing your financial situation. And another misconception is, why would I want the company to give shareholders money? I mean, obviously the company knows how to best spend that money, right? Sometimes. If you look at all the acquisitions that are made by companies, it's very common that only 30%, and I think this is being generous, only 30% of acquisitions are very successful. So what do companies do to spend money? They spend on acquisitions. Companies can also give themselves a lot more bonuses, give executives a lot more bonuses, and not that the dividends avoid all these problems, but when you have dividends that you owe shareholders and you're consistently paying shareholders and you're trying to increase those dividends consistently over time as you grow your business, companies have to analyze money a lot more vigilantly, and to make sure that they're using the money in the best possible way. It basically gives us a mentality of optimizing what you have and making sure you keep investors in the forefront and in your company and paying them out as well. So those two factors definitely make a difference to the bottom line of a company. And a couple of housekeeping things is, make sure you're not just chasing high yield. It's fine to find great stocks that have high yield, and just make sure that the payout ratio isn't overextended, and make sure that the yield is they're continuing to grow that and doesn't seem in jeopardy for them to cut their dividend yield, and that the underlying business is healthy. And those are the important things to look at. And don't get me wrong, it's definitely fine if the stocks that are good companies are paying a really high yield, because it might mean that the company has been just tanking really hard lately, and it might be an undervalued company. Because the great thing about dividend stocks, it really encourages great investing and great investing habits, because when you're investing in a dividend stock, let's say it costs $100 per share and it gives a 2% yield, if that dividend stock starts tanking down, and let's say it cuts in half for some reason, well, the dividend yield is going to double. And so as the stock goes down, then you can start buying more and more of that stock to get your yield on cost a lot higher. Because if that stock is $50 per share and it's the same great stock that you want and and you trust and you want to be invested in, and why not get a lot higher of a dividend? I love dividend stocks in terms of the mentality that it gives to investors to buy when the stock is going down and to not be afraid, because you're gaining that yield. And with dividend stocks, what the great thing is there also is you don't have to solely rely on capital appreciation, because you can rely on companies increasing that dividend and getting that payout and reinvesting those dividends to get more of that stock and more dividends. So it helps to make sure that you are gaining a lot of value from that stock and not just have to worry again on cap appreciation, because cap appreciation goes up and then it goes down. It will go up generally in that direction, but with economic uncertainty and different things that happens over the years, it's not always going to go up, it's going to go down as well. And so dividend stocks helps with that buying mentality, because dividend investors know that when the yield goes up and the stock price goes down, that's a great time to buy that stock. And when another stock goes down, it's not as big of an incentive to buy that stock. And another thing to know about dividends, they're not void of risk. Just because a company is able to pay out dividends doesn't mean that this stock ends up becoming super safe and not risky. Just like any stock, there's the risks that come with it. And in future videos, I'll talk a little bit about the dividend stocks that I invest in, my dividend portfolio, and talk about my favorite dividends that I have and dividends I might want to be investing in the future, and positions that I'm actively adding to right now, positions that I'm hoping to add to maybe when they go down a little bit. So if you're interested in videos that would go over stocks I'm interested in, especially dividends and maybe some of my portfolio, let me know. Also, let me know what your favorite dividend stock is. And if you want to see the silver unboxing, thanks, Lady Bullion. Let's see what's inside. So we're gonna have some pro unboxing going on here. All right. Let's see. This is well taped here. I'm gonna quickly grab the sharpest knife I could possibly find. Okay. Let's open this guy up very dangerously. Okay, there we go. Promote this. Alright, let's see what's inside. Oh, awesome. Got Lady Bullion stickers here. Nice. And congrats on your win. Prize sponsored by CNR Treasuries. Thanks, Lady Bullion. Thanks, CNR Treasuries. Let's open this up. And while I'm opening this up, don't forget to check out Lady Bullion's channel and CNR Treasuries channel. Alright, let's see this. 1776 to 1976 bicentennial set here, proof set. Wow, that's really pretty. Alright, well that was the unboxing. Wow, they're really awesome. Look at that. Shines really nicely. Wow, it's a pretty nice box here. That's so cool. And thanks again, Lady Bullion and CNR Treasuries. And just a friendly reminder, I'm not a financial advisor. These videos are for your entertainment and educational and informational purposes only. Thanks for watching, and don't forget to like and subscribe.